We detected an unusual trade worth $30.2 million on Lam Research stock, ticker symbol LRCX. And what's also very unusual about this is that Lam Research reports earnings next week, January 29th. And so in this video, we will show our earnings trading strategy based on our analysis of this unusual option activity to find out if this wealthy investor is bullish and buying Lam Research before earnings or bearish and selling Lam Research. Because as we all know, the rich have more access to information, including leaked insider information such as earnings reports, to make better financial decisions. No wonder the rich get richer. And so without further ado, let's dive into our analysis and then our trading strategy. As we can see here on the options, time, and sales tape, 3,005 contracts were being traded at the same time at 2:46 at the 15-second mark. But notice that we also have multiple trades happening all the way over here for even more contracts at the same time for the same options, these May 16s at the 85 strike calls and these 72 strike puts. And so we need to calculate the total number of contracts of this trade. So we have 3,005 plus 400 plus 400 plus 400. And we have a total of 4,205 for this trade that is being done as a spread here. Okay, so let's dive into the option chain to find out more about these unusual option trades. We can see here that for these unusual options that expire May 16, that at the 72 strike puts, we have a volume 4,000 that is greater than the open interest of 500. So we know that these are new opening trades and not closing trades. The same goes for these 85 strike calls, 4,000 volume greater than the open interest of 2,000. And so both of these unusual options are new opening trades and not closing trades. And based on our analysis, this wealthy investor was buying the 85 strike calls and selling the 72 strike puts. And so when we analyze this trade on the risk profile profit loss graph, where the x-axis represents the share price of the stock, which is currently trading over here, and the profit loss on the y-axis, note the zero break-even line over here. And so when the share price goes down, it becomes more negative loss. If it goes up, it becomes more positive gain, because this is a long bullish trade, and we can confirm it on the Greeks. We have a positive delta trade. If it was a short bearish trade, it would be a negative delta. Now, one of the very interesting things about this trade is that it is hedged. You can see this blue line, which represents the option's expiration date, whereas the purple line represents the current date, is flat, meaning the trade will not be much at a loss, because you can see here the profit loss here stays at the same place, that blue line, all the way to the $72 share price, because this wealthy investor sold the 72 strike puts as a cash secured put, which means they are willing to own 100 shares at this strike price. And so each of these cash secure puts requires $7,200 of buying power. And since we know there was a total of 4,205 contracts that we calculated earlier that this wealthy investor was trading, we can multiply that out and get a total trade that required $30.2 million. But keep in mind, earnings is coming up next week, so this is a higher risk trade in comparison to the trades that we share on our website, which has a higher probability of profit and lower risk. And so if you want access to better trade ideas, then go to our website.
Visit www.unusualoption.com to join our membership and start your journey to a financial success with a partner you can trust.
We will also put a link to our website at the top here. Keep in mind, not all of these unusual trades will be profitable. Even this one might be a loss. But as long as we diversify with higher quality stock picks based on this type of data analysis, then we can become more profitable in the long term. And so if you want more stocks wealthy investors are trading for your portfolio diversification, then go to our website, where you can also gain access to better trading strategies that also lower risk while increasing the chance of profit. For example, this trade here, because it requires a lot of buying power per contract or trade, we set up a different option strategy where we can use position sizing to manage our risk. You can see here our strategy is all the way closer to the earnings date for the January 31st options, because earnings is on January 29. And you can see our positions over here. POS stands for position, green means buy, red means sell. But we have a different ratio here as part of this strategy. What we mean by that is that for each of our trades, we sold 2 of the 87 strike calls, and we bought the 89 strike call, and we bought the 83 strike calls. And so when we analyze this trade strategy, we can see here that this strategy is known as a butterfly spread. It has a cost of $101 of debit per trade, much less than the $7,200 required for the unusual option trade. And at max profit, which shows up in blue over here, at expiration, you can see is about $298 per trade, which means our risk to reward ratio of 298 reward divided by risk of 101, the cost of the trade, is a ratio of 2.95, which means we could potentially make 295% profit on this trade. And so the reward is in our favor. This risk to reward ratio is nearly a 1-to-3 here, and so very much in our favor. And when you take a look at the Greeks, you can see here that we are going long bullish, and that is why we have a positive delta trade. We also have a Vega that is near zero, which is good for earnings because we don't want a very positive Vega, because we know that after earnings there will be a volatility crush that will affect our options trade. And so we want to make sure that volatility does not affect our trade. And that is why having Vega near zero or below zero is best for earnings trades. And so if you want to learn more about our trading strategies or gain access to the trades of wealthy investors or potential insiders, then make sure to go to our website. We'll put a link at the top here. Let us know in the comments below. What do you think will happen to Lam Research after earnings? Do you think it will go up, or do you think it will crash down? As usual, please hit the like button, subscribe if you haven't, take care, and have a wonderful day.